Artur Wiśniewski, Stockbroker.pl. Witam wszystkich bardzo serdecznie. Pasywną rewolucję czas zacząć, mimo że nie jest piątek, lecz czwartek, godzina 12. Nie zmienia to faktu, że zaczynamy dzisiaj w nieco innej porze. Będziemy dzisiaj mieć panel dyskusyjny i będziemy debatować na temat trendów ETF w Europie, na świecie i w Polsce. Wrzucamy intro i za chwilę zaczynamy naszą dyskusję. Przedstawię Wam naszych gości. Hello everyone, welcome in our show Passive Revolution. I would like to invite you, Michael Huber from Invesco, Tomasz Paczka from X-Trackers, Robert Sochacki from Beta Securities, and Bahram Sadighian from iShares. Gentlemen, first of all, please tell me if I spelled your names in a proper way, and also please tell me where do you live and what do you do. Michael, could you please start and say one or two sentences?
Sure. So first of all, thank you very much for the introduction, and of course you spelled my name correctly. My name is Michael Huber, and I represent the ETF business of Invesco in Central and Eastern Europe. I've been with the firm for approximately 6 years now, and Poland is definitely one of our key focus markets in the region, so I really look forward to the discussion today.
Thomas?
Hi Artur and everybody, welcome, and also dzień dobry from my side. My name is Tomasz Paczka, and I'm actually sitting in Austria, in Vienna, and we are covering Austria and Eastern European countries out of here. So we, as a German asset manager, kind of go this direction to the east, also to Poland. And it's Eastern Europe got really strong, and Eastern Europe is developing very strongly over the last few years, and also in Poland a lot has been going on. So the topic is very actual, so it's fresh, and we still have to get a lot of work in front of us in terms of explanation. So I'm really looking forward to this discussion and see where we can help.
Bahram?
Yes, hello everybody. I hope you can hear me because I've got some IT issues. My name is Bahram. I'm responsible for the BlackRock business in Austria and Eastern Europe. I started this position in 2008, and I had the pleasure for the last 12 years to expand the business from Austria to Eastern Europe countries. And in Poland, we're seeing a lot of wealth opportunities, and we are servicing clients there. Pension funds, insurance companies, asset managers, wealth managers now for the last 4 to 5 years. And thank you very much, Artur, for having us. I'm looking forward to this discussion.
Robert.
Hello, everybody. Probably Polish investors know us well. We have ETF business also worldwide, but limited to Poland. So we are focusing on the Polish market. If we introduce and we do foreign products or foreign indices, it's with the Polish zloty hedge. So we are focused on Polish investors, Polish zloty denominated investments. And we are focusing on Poland, and we also see opportunities here, and we see growing interest, growing assets. Not the way we would like to see, I mean, not to the extent that we think it deserves, but still, I hope that also interest from companies like iShares, X-Trackers, Invesco, this also will bring some new opportunities, new publicity, and understanding from investors how ETF business and passive generally is important in long-term investing.
So you generally work for different companies, you live in different locations, but all of you are responsible for ETFs. And as far as I know, all of you are responsible for ETFs in Europe, especially in Poland, or also in Poland, including Poland. But I would like to ask you first a question: what is the reason to buy ETFs? Because ETFs, it's something new in Poland, and many people don't know how it works and why to buy it. Is it the reason? Is money or the costs are the reason? Many people say, okay, most of active managers don't beat their benchmarks, so we choose passive ETFs. Is it the reason to buy ETF, or maybe there are other? How do you look at this? Who are ETFs dedicated to? Individual clients or institutional clients? What do you think? Let's start with Thomas.
Sure. I mean, the product ETF is not really new in terms of how we are using it, and it has a long path behind in terms of development of trading, exchange liquidity, and so on. So the product, if you compare it to a normal fund, is actually the same instrument, but being traded on exchange. And the beauty about it, I mean, just a lot of people know, yes, it's cheaper than the just the mutual fund business. It's exchange listed, so the liquidity is a little bit higher. So you have the possibility also to trade intraday. So you have kind of this access to the market. But in the end, just for the client, what is the really most important aspect? It's easy, it's transparent, and it's flexible. So it's a very cheap access into the market. And what I really like about this product is kind of very democratic in terms of you have the same product for kind of the biggest institutional investor as you have it for a single person or private person who can access the same product at the same cost and at the same price.
Bahram, what do you think?
Let me take a step back and just explain very simple what ETFs are and why for institutional investors and wealth investors, it does make sense. So before an ETF had been invented like 20, 25 years ago, clients wanted to trade a basket of stocks, had to do the single trades by themselves. So they had to trade each single line, and it was quite expensive. So just like Thomas said, the beauty of an ETF is you've got a whole basket of stocks or bonds. You have got a fund solution, which is also gives you some extra protection. You can handle these stocks very efficient on several stock exchanges, or these funds, very efficient here. And just like Thomas also mentioned, are very cost efficient. So it had been a revolution here in the market, with ETFs giving you access to quite a large number of stocks or bonds. You are able to trade them very efficiently, and they're very liquid. They're very cost efficient. So if you compare them to active funds, it's like 20% or 30% of the costs of active funds here. So I think all these components, bringing them together, having really a fund, having a variety of products, being very cost efficient, having the liquidity, and being able to handle and to trade a bundle of stocks and or bonds makes it very attractive.
Thank you very much, Robert.
Okay, I think it's everybody basically will say the same. I can say from one word from the perspective of the Polish investor, and one word from like general observation as a participant in this market. First, from the Polish investor perspective, I think what makes it great is transparency and cost, because unlike in other European countries or in the world, basically most of the countries, active funds in Poland are pretty expensive. Now it's 3% management fee, so it's exceptionally expensive compared to other markets. So if you look at the ETFs, be it Polish ETFs or foreign ETFs with the costs below 1% or below 0.5% or close to zero for American markets, very liquid, large ETFs like I know Spider, for example, then you have pretty obvious cost advantage. Second, because of I would say history of performance of the Polish funds and the reasons why they underperformed, the transparency, so knowing what you really have by buying it, so you don't have something you wouldn't like to have. I think this makes also important distinction between active funds, non-transparent funds, and passive or ETFs in general. I think these two aspects make it important. But from the general perspective, I would say that it is changing because we also see the trend for active ETFs. So investors see not only this possibility to buy a bundle of products or cheap or something, they also see value in tradability. So to be able to trade it intraday, I think that would be my explanation. That makes some kind of attractiveness of this product, because one of the fastest growing products now, especially in US, of course there are some maybe tax issues, but generally one of the products that grow are non-transparent active ETFs. So there must be something more than just mathematics behind that. 80% of people don't beat the benchmark in active funds. So there must be something else. And my observation is that this must be tradability. But let's hear Michael what he thinks maybe about this also.
Not an easy one because most of the points have already been mentioned. Probably to take this one step back, what makes ETFs attractive, especially for private investors, is definitely the circumstance that you can get a high level of diversification in your portfolio with a comparatively easy tool. And you can use those tools, those ETFs, as building blocks, and also kind of get the specific allocation to, let's say, various regions or various themes in your portfolio. So I think it's just a very comfortable way of structuring your own portfolio. And of course, as all of you have mentioned, you can do that in a very cost-efficient way. Just think about a classic fund where you will definitely pay a front-end load when you enter into the investment. This is not the case for ETFs. When we talk about management fees, I can tell you in Europe, the average fee for ETFs is between 10 and 30 basis points for most of the products. So it's extremely cost efficient compared to other investment opportunities. Transparency is definitely a very important point when it comes to ETFs. So you have daily transparency for most ETFs, at least for the classic beta ETFs that replicate classic indices. You can see exactly what's inside these indices, which helps you to avoid cluster risks, and also the performance that Arthur you mentioned in the beginning of this question. I think there's a great tool that's provided by S&P Dow Jones Indices. It's called the SPIVA tool, and what they do on a regular basis is they compare the performance of active managers versus the performance of ETFs. And the result is pretty clear, because over a time frame of 5 to 10 years, it's usually around 75 to 80% of the active managers that do not succeed in beating their benchmark. So I think there's a number of aspects why ETFs make a lot of sense, and so I'm happy to be in this industry.
Thank you very much. You said that low costs used to be the basis as the reason to invest in ETFs and beating the benchmarks in long term, but the market is changing. So could you please describe how the global ETF market looks like, and how does Europe differs from the rest of the world? What are the trends in terms of in global market and also in in Europe? I mean, the market size, the types of assets. As far as I know, the people from Asia are the most risky from all over the world. What types of products, active or passive? This is the one of the threats which Robert mentioned. Maybe the dividend policy or other aspects of products. What do you think? So let's start now with Bahram.
Was this me, Artur?
Yes.
Yeah, perfect. 'Cause I'm just breaking away sometimes. Let me answer this question in two parts. Yeah. So, what differs in Europe from the United States in terms of the users? And the second part, I would like to refer about the products and the trends we're seeing in Europe and the US. I think the biggest difference we're seeing in the US are the users there. Yeah? And we're seeing that approximately, if we look at the market, 50% of the ETF markets are already wealth and private users, which is a tremendous success. It means that half of investors in the United States are already using somehow ETFs in their saving plans or pension plans. So this is something which is also a trend we're seeing now starting in Europe. While in Europe the users are 80% to 75 to 80% are still institutional clients, like pension funds, asset managers, larger wealth managers. In the United States, most of them are wealth. And especially when it comes here to saving plans and for your own pension portfolios, most of these clients are using ETFs in somehow. The second part is what kind of products are they using, and I believe that the US market is somehow pioneering in terms of the trends, and we will refer to that a little bit later in your questions. Is we're seeing smart beta ETFs are coming from the United States. We're seeing a lot of ESG trends are coming from there, but we're seeing also this had also been mentioned, I think, by Michael and Robert. Active ETFs are already coming from the United States, or multi-asset ETFs. So we're seeing a lot of trends are starting there and are slowly adapting now in Europe. And what makes me also very happy is if I see it now in Poland, what kind of investors in Poland are using ETFs. We're seeing now that at the beginning, like 7 or 8 years ago, when I started to cover the Polish market, most of the DC or DB pension plans had been using ETFs here. Now we're seeing the demand is really coming from the private market. So from people on the street who are literally thinking about how to build up wealth, how to build up a pension portfolio, a second or a third pillar pension portfolio for their own savings. And these kind of investors are now really starting to ask for ETFs. And this has changed a lot in Europe, and it has changed a lot in Poland. In terms of regulation, for example, we're seeing now that the regulations and the financial market authorities are adapting now slowly and are opening up the market here for ETFs. And this is making me happy, this is making investors happy, and this is helping also really the second and third pillar pension portfolios in Poland.
Thank you, Bahram. Robert?
I'm looking at the trends. I will speak what I read and observe. My colleagues can say what they see, basically, especially in Europe. But for me, I can tell you what's interesting in this for me. I think interesting is not the fact that between 40-60% of assets assets under management is in ETFs in US, for example, and in Europe is around 10 to 20, let's say. The interesting thing is why it happens. Why Europe is it lagging really? Is it behind the US? Is it catching up? Is it trying to catch up, or it will never do because there are some other reasons? And I think that that there are reasons why Europe is a little bit different than US, and I think this is distribution and the history of strong presence of institutional banking, basically distribution of funds in Europe, and the same is in Poland. And there are also other countries from Asia also, and there was interesting articles about it some time ago, that there are countries where distribution basically pushes out the ETFs and the low-cost funds generally from the distribution, and it's difficult to support distribution without having the possibility to pay kickbacks. And there are very few countries that do not allow for kickbacks, and most of them this way or another allow either upfronts or kickbacks from the management fee. But generally I would say that that investment banking culture, let's say, from the US is supporting also this strong presence of stock exchange traded products. And the second thing is that what is interesting for me is that that there are new trends that are very interesting also for Polish investors, and we will probably have a little bit different path than the rest of Europe or world, because we missed basically this first 20 years of ETF development. So there are new thematic ETFs, indices are coming, and people are now looking, especially younger investors, because there is new generation of investors coming, and those guys are looking for 5G type of, or cloud computing, or fintech. So there are, I think there is a trend for new type of indices that are looking for very niche products, and I think especially younger investors will look for what suits their view, and this will be for me something is that is coming, and this will make I think a little bit different way of getting to ETFs for Poland than for the rest of the world, because we didn't have this development of plain vanilla products. We have them, but I think we started a little bit from a little bit different position, and we might miss this kind of very stable development of long-term savings ideas.
Thank you. Michael, how does it look like from your point of view?
Yeah, I think there's one global trend which is really positive, and that's the clear trend into passive investing. I think it's also important what Bahram said, that the US is mainly driven by retail or wholesale investors, so by private investors, while Europe is more driven by institutional investors. So when you compare those two investor bases, an institutional investor has much more possibilities to enter into passive. So it's index funds, it's segregated accounts, it's also ETFs, and that might be one of the reasons that the growth rate or have been significantly higher than in Europe. Arthur, you also asked for market size. I mean, looking at the global ETF market, we talk about $7 trillion US. Thereof, around about 5 trillion are assets managed in US ETFs. 1.2 trillion is the number for Europe. So you can see those two markets are really the relevant markets for ETFs. Of course, you have some other jurisdictions that are important as well, but the bulk part of the assets is definitely invested in those two markets. So there's another aspect when it comes to US ETFs versus European ETFs, and that's the question how those ETFs are trading. So what you can see in the US is that you typically have one trading venue per ETF. plus the investor base, mainly retail driven, that gives you a high on-exchange volume in those ETFs in the US. The picture in Europe is slightly different. So we have a lot of local exchanges. Those are established exchanges like Citra, like SIX or LSE. But you also have regional exchanges that trade those ETFs. So the volume, the on-exchange volume is much more fragmented. It's much more distributed across those exchanges. Plus, institutional investors tend not to go on exchange, but rather trade directly with brokers, with market makers. That's called an OTC trade. So the exchange volume is much higher in the US than it is in Europe. When it comes to trends in products, I think it's always important to keep in mind where a market or where an investor is in the decision process to use ETFs. So what we can observe is that investors that are comparatively new to ETFs, comparatively new to this investment wrapper, to this vehicle, they tend to start with how we would call it standard building blocks, so standard indices. So they don't want to spend too much time on really understanding the investment strategy behind, but prefer to go for classic indices like S&P 500, MSCI World, just a major benchmark indices. The more sophisticated investors become in using ETFs, and the more security they develop around this investment vehicle, the more they focus on the content of those ETFs, and that resonates, I think, quite well with what Robert said. So thematic ETFs are definitely on the rise, and especially from the private client segment.
Thank you very much. Thomas, how about you?
Actually, I can really echo what the colleagues already said. So just the differences between US and Europe are there. They are historical, but they are changing a lot. So we are learning a lot in Europe in terms of just this trend in starting to use ETFs in wealth accounts, in private accounts, in saving accounts. It's something over the last 5 years that really has driven this market change very fastly in the direction of the US. I would also say or mention maybe just the two different regulatory bases, because in the US you have a different legal state. This is this Act 1940 and in Europe it's UCITS. So this makes kind of also these two regions pretty much differently, where actually for the European investors, only the UCITS funds are really relevant because it makes sense out of the tax perspective. And in the US, it's more kind of, just it's not easy for us to buy US ETFs here. This way of trading in Europe, mainly, just 80% is OTC, so with brokers. This is going to have changed because even more private people come to the business or come to the market buying ETFs. This will kind of also increase the on-exchange liquidity, and it's going to push also this factor forward. And in terms of the trends where we are moving or where we are heading, I think one of the best developments of the financial industry is also kind of evolvement of ESG, so environment and social governance principles in the investment. And maybe I think this is something that has been driven very strongly out of Europe. So US is kind of picking up very, very fast, but Europe was actually one of the first, or kind of the regions like in the Nordics where ESG is playing a role for a long time. And we are now getting there, just to make it really a global topic and theme. And I think it's going to be relevant for all of us. I think you are on mute, Arthur.
Thank you, Thomas. You're right. I forgot. Thank you very much for your descriptions and opinions. You agree in many points, and you confirm that there are certain differences in ETF market between USA, the main ETF market, and Europe. Please, let's try to focus on Europe now a little bit more. So let's talk about trends in Europe. The questions which which I want to ask you are: what is the market growth in Europe, and how does it differ in different countries? I mean, is passive revolution, so-called passive revolution, develop in a similar way in different parts of Europe, in different countries? And where to trade ETFs? We have main exchanges like Citra in Frankfurt, we have London, but we have also regional exchanges like Warsaw Stock Exchange. So what are trends also in this section? So let's focus on Europe now. What are the trends which you can notice? This time, let's try to start with Robert.
Okay. Well, in this group of people, I shouldn't describe too much European exchanges and European countries, because my colleagues see it on the daily basis. I read about it mostly. So I will try to share maybe a little bit from the Polish market and Polish perspective. What's going on in Poland, how the market is growing, what kind of ETFs are popular, what people are investing in, and who is investing, let's say, okay? I think it will be more interesting for everybody. So I would say that definitely the trend is passive. The trend of passive investing is growing. So the passive revolution is coming to Poland, or came already, and I think that the growth of ETF holdings in the portfolios is growing, and it's growing fast. So I think that the positive trend for passive is there. What is different, I think, is that I would say that the use of passive products for institutional investors is a little bit different. So when they access markets difficult for them to follow, they use ETFs for institutionals. Whereas in Poland, they do not use ETFs at all. So generally, there are very few institutional investors that use, for example, our ETFs that cover VIG20 or MVIG40 or these kind of things. They I would say that there are very few that have a history of using even MVIG40 as a pretty simple vehicle to at least a little bit get into this market. So our investors are mainly individual investors focusing on mostly longer term investments, that they use these plain vanilla products, but the rest is used in a way like every other market investors are using. So when the volatility is high, we see a huge increase in the volumes of short and leveraged products. We have two, and they see the huge volumes, huge for us, of course, huge volumes in the terms when the volatility of the market is high. What we also see is that there are no redemptions, basically. So Polish investors, it seems that they see that there is very limited assets under management in ETFs. So the moment when the market goes down, people are using it to buy more. If the market is going up, they are basically stop buying. So for when there was March and the market was dropping, we saw the highest increase in creations in the history of our funds. And then when the market was stable or basically nothing was going on, we had very few. So So we see that people want to buy, they are looking for good moment, and when the market is volatile, when the market is going down, they are using this opportunity to buy more. From how we observe the market, also not only on our ETFs but in global ETFs, because of course Polish ETFs, this is like a couple of hundreds of millions of zlotys, but in global ETFs held by Polish investors, it's like probably low couple of billions of zlotys. So the rest, we used to see that only very small group of people was using ETFs, and they were mostly focused on very strange indices, like, for example, commodities. The commodities were popular as a way to access the market that otherwise you cannot access. But now this is losing the importance, let's say, or in the whole picture, the more exotic ETFs are losing the share to plain vanilla ones and these thematic ones. So S&P 500, for example, or Nasdaq, are gaining the assets and gaining the interest from the Polish investors also. So I would say that we are still in the very preliminary stage. So we are still in the very small group of investors. There are probably tens of thousands of investors that are using ETFs in Poland. We need millions, really, or hundreds of thousands in order to really be important part of the market, and to have more attention from Bahram, Thomas, or Michael, because I think that if we have hundreds of thousands and if we have billions of dollars of assets, then there is a potential, of course, because there are hundreds of billions of zlotys laying in the zero interest bearing accounts. So there is a possibility, there is potential for growth, and ETFs are growing. They are growing steadily, but still we need more, let's say, publicity for ETFs and for passive investments, and that's why we would like to have more of this kind of discussions that would promote ETFs in Poland.
Thank you, Robert. Michael, could you please share your view?
Sure. So I think the growth rate of ETFs in Europe has really been phenomenal over the past couple of years. So I mean, 10 years ago we were at around about 100 billion, and we grew those assets to 1.2 trillion. So definitely a tremendous growth. To phrase it in a bit more simple words, that means ETF assets doubled every 4 to 5 years. So really strong growth numbers. I think in the last question, Thomas mentioned one of the most important trends that we see in the European ETF industry, and that's definitely the trend towards ESG. So when we look at the flow data year to date, ESG ETFs accounted for around about 40% of the net new inflows into the European ETF space. And that's really phenomenal when you look at the comparatively low asset base. So at the moment, ESG ETFs just account for around about 7% of the overall EMEA ETF assets, but made up 40% of the growth. You might come across some different numbers because it's not that easy to distinguish which ETFs are ESG, which are not. Just think about thematic ETFs that target a theme like clean energy or global water or something. Would you count them in or not? But definitely there is a strong trend, and this trend is going to be to continue because the regulators are putting some pressure, especially on institutional investors like insurance companies and pension funds. When it comes to the most important markets, I mean, looking at the overall asset base at the moment, I think Germany, Switzerland, potentially the UK are for sure the leading markets in Europe. But I think it's also worth highlighting when you think about growth rates and the future growth in the ETF market. We expect the whole Central and Eastern European region to really be in the forefront and really drive a lot of growth. Again, starting from a comparatively low basis, as Robert just highlighted, but we all think that the growth should definitely be there. Arthur, you also asked about the best listing venues and the question where to trade ETFs. I think it's worth highlighting for private investors. You should always keep two aspects in mind. So one is definitely the spread that you're going to pay, and the other one is the fixed trading fees that your bank will charge you when you trade ETFs. So it needs to be an individual decision. I can just say out of experience, usually it makes sense to look at established trading venues. Be careful when you go to really small local exchanges. And I just want to make sure I do not mean a Warsaw Stock Exchange, but rather talk about small German exchanges. So we have an exchange in Munich, in Berlin, and so on and so forth. Spreads can be really high in those exchanges because a lot of providers do not really service those exchanges. So whenever you trade an ETF, make sure that you have a look at the spreads and that you decide for yourself if you're comfortable with this spread or if not, and if you should look for another trading venue.
Thank you very much. Thomas.
The growth in Europe was indeed very nice. So we have seen this approximately 20% in very different, I would say, client definitions or client bases. So in Europe, what we have kind of the challenge is the very broad segmentation of the market. So we have a lot of countries, a lot of different pension systems. We have a lot of, I would say, also different regulations, where in the UK or also in the Nordics, there is no possibility for paying rebate agreements at all. And like in Poland and in some other Eastern European countries, here we are very strongly developing into that direction, where also ETF kind of makes sense or makes a really relevant change into the composition. So we have countries or country by country comparison. It's a huge difference. And also in terms of trends, in every country, you have different product classes, you have a different business case you can mention, which makes it really hard to put it into one single trend in Europe. But nevertheless, just ETF is getting stance, so it's getting kind of really, or it's kind of creating huge impact into the structure of the markets. And also in Poland, Poland still has a long way to go, because the historical experience with the implementation of kind of very expensive funds, paying a lot of contribution to the distribution of the funds, has to kind of create a mind change also in politics and the regulation, where really the people will have direct access to this kind of product. So right now it's kind of more available to specialists that sit at home, that have online accounts and can trade themselves, but it's not really kind of the broad market access for the public. So where you have a really normal general people who has no real financial education to be able to buy an ETF and to kind of benefit out of the very interesting proposition this instrument is delivering. And so, just also generally, the clients have a very different background and risk profiles. So there are clients using ETFs for core allocations. Others are just playing a little bit more with different topics, themes. ESG is getting like an overall topic. So you go kind of core with normal index or ESG. So this is kind of the nuances here. But you always have to really take a look on the given country and on the given, I would say, trends in that basis. And also in terms of trading, there is always this conception, why don't we list our funds in Warsaw Stock Exchange? So we already had this question last time quite extensively. And maybe just a short answer is look where the most of the liquidity or where the people are trading. So there's no real advantage kind of to split it down into a lot of small exchanges where the ETFs are being traded. So really also in Europe we have to kind of consider or look that the ETF liquidity is being concentrated in a number of exchanges, like is the LSE, London Stock Exchange, or Xetra, or Borsa Italia in Milano. And so the rationale is where is kind of the best place to trade for clients is where the liquidity is. Just simple answer.
Thank you very much, Bahram.
I hope you can hear me because I've got a terrible background noise and I've been just playing with my iPad all the time to make it easier. I would assume that most of you guys have already been referring to the trends in Europe. I just heard Thomas talking about stock exchanges, about liquidity. And I would like to refer to sustainable investing. And I believe you probably all have mentioned it, but this is sustainable investing, and ESG is something which is very important for BlackRock, but is also close to my heart. And I want to explain to the audience what sustainable investing per se really means. So sustainable investing is about investing in progress and recognizing that companies solving really the world's biggest challenges, climate challenges or governance challenges. And it's about powering in better ways of investing and doing best business and creating the momentum to encourage more and more people to opt in a future where we are working to create a better environment and a better future for all of us. So it does sound complex. It does sound very difficult, but it's about really environmental, social, and governance insights and investing and making better investment decisions. So the audience has probably heard a lot about sustainable investing, ESG, and ESG is only standing really for these three buckets: environmental, social, and governance, and making better decisions for the future. And we're working hard here at BlackRock to offer these kind of products to our clients. And in the crisis we had in March and April, so we saw a lot of investors, institutional investors, as well as private and individual investors going out of traditional benchmarks. And after the crisis have calmed a little bit down, in May and June, we saw a lot of inflows into sustainable ETFs, into ESG ETFs. So there had been a switch really of all kinds of investors going into sustainable investing. And we are trying really to help really this progress and to help this change of thinking and investment here by offering more and more of these sustainable ETFs. And private investors, individual investors, as well as pension funds are using them. We do offer some different strategies when it comes to ESG investing. It would be too much now to explain what these kind of strategies are. There are, just briefly, avoid strategies, advanced strategies, best-in-class ESG strategies. But I just want to encourage people, if they think about investing, if they think about saving plans, their pension funds, really consider sustainable ETFs and ESG ETFs here. And they are as easy as all the other ETFs. It's not about giving up any kind of performance. It's not about green money only. It's about investing in a sustainable future with very liquid and transparent products.
Thank you very much. We see the market is growing and the structure of the market is changing. I mean, different types of products are getting more popular. And we have about 2,500 ETFs in Europe, to which we have access as individual clients or institutional clients. So the question is, how to choose the best ETF, or we can put it wider, how to invest ETFs. All of you represent different providers, so this is one of the questions: how to choose the best provider, how to choose the ETF depending on the domicile of the ETF. Maybe you know some websites which are worth following, which are very helpful to learn how to invest in ETFs, or how building a portfolio should look like step by step. I know there are many topics and many questions, but I'm just putting them for you to have some ideas how to answer these questions. So now this time, let's start with Michael, please.
Sure. So in the briefing for this roundtable discussion, we were told not just to answer this question by mentioning our own company name, so I will avoid to do that. When it comes to picking an ETF, I think you need to distinguish between two different types of ETFs. So one would be ETFs on standard indices, on standard benchmarks, where you typically find a variation of different products from different providers, and you can easily compare those different ETFs to each other. In that case, it's pretty simple how to pick the best one. You just do a comparison of the costs or of the investment result. You should think about the so-called total cost of ownership, which includes the management fee, but also the trading fee, and just pick the ETF that gives you the best result. It becomes a bit more tricky when we talk about more sophisticated investment strategies that are wrapped inside an ETF, because in that case, you really need to do some research around the investment methodology, around the idea behind the strategy or this specific index, and find an ETF that best represents what you are looking for as an investor. I think the domicile is something that definitely can make a difference. Keep in mind that a lot of countries charge so-called withholding taxes. So that's a taxation on dividends that are paid out by stocks that are held in the index. So it can make sense to pick a domicile where you have double taxation agreements in place and benefit from a lower tax rate. In that respect, you can also think about replication methodologies, like synthetic replication can be really appealing for you as equity, because in some instances you can reduce the withholding taxes significantly, so you can even bring them down to zero. Arthur, you ask a lot of questions, so I want to close with two websites that might be interesting for the audience. So if you want to know more about general ETF trends, about the size of markets, so on and so forth, I think etfgi.com is one of the go-to places for those numbers. But you can also look at the website of all different providers. We all offer a lot of research, general research about the ETF market. When you want to compare products, obviously Bloomberg is the best and most reliable source. I know that most private investors do not have access to Bloomberg, but there's a lot of websites that also allow comparisons. So one of them is justetf.com, where you can really compare products in a comparatively simple way.
Thank you very much. Thomas.
Thank you, Michael, for the technical stuff. That was good. No, to be honest, when we want to go into detail in terms of ETF structuring, trading, efficiency of the infrastructure on the background, creation, redemption, in-kind cash, physical versus swap, there is a lot of stuff you can go into really understanding what's happening. And maybe just to put it down into a easy solution for clients. The providers differ in a number of ways. I mean, just we all have very similar products. The pricing differs by some basis points, plus, minus. So there are some funds of Invesco that are really very good in some markets. I mean, iShares has a huge offering, and just this number of funds they can really put on the table is crazy. So it's really great what they are doing there. And you always have to look on, I mean, just what is really the suitable product for myself, and where can I find this one? And also, as Michael mentioned, there are this kind of comparison homepages like Just ETF, where you can pretty easily just search for an underlying. For example, I want to buy a global equity ETF based on MSCI World. I can search for the kind of top 4 or 5 providers, just compare the total return performance, and just decide for myself what does fit for me the best. And we can go into kind of withholding tax advantages of the different domiciles, like is Luxembourg, like is Ireland. But in the end, for the client, the performance matters. Okay, so if you look at the total return comparison, or total return, what comes out of the investment, it's a very good guideline to select the ETF. And maybe just to bear in mind the trading costs. So just to look on just what is the spread for the given funds, because there also can be huge differences, because one is more liquid, one is maybe not as liquid. Just to weigh off this difference between, maybe it's cheaper, but it's more expensive to trade. So you have to be very kind of cautious and careful in terms of really analyzing it. And just to add to the homepages, already Michael mentioned, I really like Track Insight. That's a homepage where you can find very high quality data for ETFs, and also the comparison tools are state of the art. So Track Insight, I can really recommend to everybody. And just also all the provider homepages are really good. So you can find a lot of index data, a lot of transparency, a lot of just almost everything you're looking at, you can find on our homepages. And there is one very good homepage in Poland that's actually Stockbroker.pl. So which is just, Arthur, you're doing a really good job here in explaining ETFs and bringing the topics to the table that really matter. So I think that's also a very good source to look at.
Thank you, Thomas. I see that you are really well prepared. Bahram, please.
Thank you for choosing me, because I have to drop off in 3 minutes. Yeah. I think most of the technical part has already been mentioned. And for the audience, it's quite difficult to understand what is tracking error, what is liquidity, what are bid-ask spreads. So that's a lot of technical stuff. Yeah. And I can only echo what Michael said and Thomas said by the pages like Bloomberg. Yeah. They can help you here to find the best ETF for yourself. But we shouldn't forget, while we're thinking about the technical part of ETFs, which is the largest, the most liquid one, the most cost-efficient one, we should really think about also about the asset allocation. So some clients spend a lot of time about choosing one single product, withholding taxes, distributing or accumulating, but completely forget about asset allocation. So if it comes to individual investors, I would highly recommend to think about asset allocation. Choose maybe a provider who can offer you model portfolios and give you advice in when to invest in which asset class and which ETF, or go for a multi-asset ETF. So this is also a trend which is progressing now the last years, multi-asset ETFs, who have everything packed together, a whole combination of ETFs, the asset allocation is done, the risk management is done, and you as an investor really benefit from having all these in a very cost-efficient product. So really consider the asset allocation and think about multi-asset ETFs.
Thank you very much, Bahram. As far as I understood you, you have to leave in a few moments. So if you in fact leave, thank you very much that you were with us. But please continue to stay with us as long as you have time, as long as
Absolutely.
you have,
It was an
okay.
absolute pleasure seeing my colleagues again and seeing you, Arthur, again. And sorry if my IT didn't work out that great, but it's the pleasure of home office.
I could hear you perfectly. Thank you very much. Robert, the last but not least.
Yeah, okay. I think I won't give you anything better that was already said. I would like to mention one thing that Bahram a little bit mentioned. So before we think about choosing the best ETF and the best ETF provider or the best product that we want to use, we should start with thinking what's the reason we invest, what we want to save for, what are the goals, what are the risk appetite, so really it's not that only this is important, everything is important, but I would discourage from starting from the point choosing the best ETF provider or the best ETF generally. First, we should say, I want to save for my retirement, or I want to save for the school of my kids, or I want to save for something else, or I just have enough money for everything, so I just want to play a little bit with this money, and I want to, I don't know, speculate even. And ETFs are also helpful for this kind of usage. So I would say that first we have to decide what we want to do. And second would be, what would be the portfolio that is best suitable for the goals and for the attitude that we have towards investing. And when we do this, then we have the asset allocation. Then we want, then there is a time to choose what kind of products within the, let's say, equity or international equity or Polish equity or whatever, what kind of products we want to use. And then do we want this or that ETF or ETF provider? And I think I can't say anything better that was said by Michael or Thomas. So I think this was perfect. But I think we should start with answering the question: why we really invest, and what is the time frame, for what period we invest, because this will determine what kind of products we will use. And at the end, there will be a challenge of choosing the best provider. It's also a little bit easier for me to answer what product we should choose from this perspective, because out of 6 that we have, 5 is unique. So there is no competitive product for our MWIG40 or for WIG20 short or hedged to Polish zloty American indices. So it's a little bit easier for me, maybe, because I don't have to compete with too many products except one. But I think that really the first questions are those: why we invest, what is the time frame, what is the asset allocation, and then we should focus on which product does the best job for us in our portfolio. Thank you.
Thank you very much, gentlemen. We are finishing the main part. If you have any more time, we have a few questions from our viewers. So I will not ask all of you to answer these questions. I will just ask about volunteers. If you want to answer the question, just take your voice. So the first question: why we do not have access to all European ETFs in Polish brokers? What is the reason? Maybe you are not the best address to ask this question, but maybe you have some experience. Maybe you know brokers in Europe. How does this situation looks like in other markets?
I can be volunteer because I spoke with few brokers in Poland, so I can say few words. One is that there is a documentation issue. So some ETFs have, because of the regulation, they should be, let's say, understandable to Polish investors, and some of them have documentation that does not satisfy the regulator. So, for example, key information document is not in Polish, or that wouldn't be a huge problem, but there are some issues with the documentation, especially for American ones that do not have at all these documents that the European Union requires. And for even European ones, there are sometimes, and some brokers take regulators' words very. I'm not saying that we shouldn't take it seriously, but I'm saying that you have a certain field of maneuver here, and some of them offer and some of them don't. And second is that also there are brokers that see the opportunity not in accessing the ETF market, especially 4-in-1, but they distribute, for example, active funds, and they make nice money on distribution of the active funds and selling the passive and giving access to the investors with the passive funds or passive products generally would make probably a little bit less money for them. So there are also mercantile kind of reasons why. And maybe my colleagues, I don't have to, I don't want to dominate this part, but just two things.
Okay. Thank you very much. Maybe let's have another question. Which ETFs are most popular? Physical replication. Okay, so it's the question about the replication method, and the dividend policy, accumulating or distributing. Do you see any trends in this area?
Absolutely. So I'm happy to take this one. When we talk about the ETF market as a whole, we see that a lot of, especially private investors, they are in favor of physical replication. And one of the reasons is because physical replication is very easy to understand. So if you want to replicate an index physically, you just buy the stocks of the index into your portfolio, and that's what you hold inside the ETF. But what we can also see, and I mentioned US equity investments before, is a clear trend towards synthetic, especially for US equity. It's a shame that Bahram had to leave because they just recently launched a synthetic US equity ETF. And it definitely makes sense from a tax perspective to think about synthetic in US equities. So I would say, generally speaking, from the market, a clear preference for physical. But in some areas, it makes sense to go synthetic. And there's even areas where you do not have a choice. So think about commodity ETFs. It's pretty hard to hold lean hogs physically in your portfolio. So it will always be a synthetic structure. When it comes to accumulating and distributing, I think there's not a clear trend. It's just the preference of each individual investor. So some investors prefer one of the share classes, others prefer the other. At the end of the day, it's always the decision of the investor, and does not make a huge difference.
Maybe just to add one point, Michael, to this one, because there's always this discussion between physical and synthetic. And as you mentioned, there are really good reasons for both replication methods. And what a lot of investors really do not know is that the risk composition of these two replication methods is actually the same. Because in the past, there have been a lot of worries because there is the swap and you have counterparty risk. But since I think 2 or 3 years after the implementation of EMIR guidelines in Europe, also this swap have to be securitized. So in terms of the comparison of physical with security lending and indirect swap with securitized swap is actually the same basis and the same status for the investor. So for a number of years, we do not have this discussion a lot on the table.
Thank you. Robert, there is one question directly to you. Who is the main customer of beta ETFs, foreign or Polish investors, individual or institutional? What is the share? Do you have any data or is it public?
Well, normally it's not public. Anybody can buy.
It is.
Well, for some reasons, because they approached us directly, we have some knowledge. It differs from ETF to ETF. I can say that for MWIG 40, which is in a way unique and not easy to access for foreign investors, because there are small and medium-sized companies, and the hustle with buying all these 40 shares and with very limited liquidity, maybe it's easier to buy an ETF, and we have to do all the job on rebalancing and everything, and even buying it. So for this fund, we have a big part. I don't want to let's say share everything, how much is it or what, but it doesn't matter too much. But a big part of this ETF is held by foreign investors, two foreign investors, and they have really substantial part of this portfolio of this ETF. And we also have Polish institutional, let's say, investor that has a big or substantial part, much smaller, but still. The rest is probably individual investors. We see that main investors in our funds are individual investors. And except few large ones that come to us directly and say, look, we were wondering, or what can you say about it, and things like that, we see that individual investors are the major ones. And in WIG20, for example, that is pretty small because it's 50 something, let's say, million zloty. So it's really, for European standards, it's not really a fund. So, but in this fund, vast majority is individual investors. And for short and leveraged, we have two. They are very small. So these are funds that have large turnover, but again, this is specifics of the Polish market. Also, in futures in Poland, a majority of the turnover is by the individual investors on WIG20 futures, and also in our funds we see that short and leveraged are traded on the daily basis on pretty nice numbers from the perspective of the brokers that do it. And they do, and this is done by the individual investors that see the value in trading this versus the futures. And in the new products that we are introducing, S&P 500 and Nasdaq 100, that will be hedged to Polish zloty. We think that this will be also individual investors. There is very limited reason for institutional investors, and they will be replicated synthetically. So because of the tax reasons, we made the research, and futures work very well in this, and with time it will be probably swap, but generally synthetic replication makes much more sense from the dividend taxation perspective.
Michael, there is a similar question to you about share of institutional versus private investors in Xtrackers and Invesco. Are there any data which is public?
Maybe I can start with this one. In Europe, it's 80% of the market by institutional investors. So ETFs make it, or ETF or institutionals make 80% of the ETF market itself. So the answer is pretty simple. We have started, or the most evolved market is professional ETF usage here we have. But to be honest, there was a huge development in the wealth space, or in the private space, in the UK, in the Nordics, in Germany, in just facilitating savings plans on ETFs. So this market is growing very strong, and it's pretty hard to say just what share it's going to get, but I think it's the strongest growing part of the business right now.
Yeah, I would fully resonate what you just said. I mean, in the ETF world, it's always a bit tricky to really pin down the exact investor in your product because it's traded on exchange. So we more or less rely on market data. What I would add is that the clear differentiation between let's say that the retail market or private market and the institutional market is not always that easy. Unit-linked product, so an insurance that's sold to a private person but managed from an insurance company. Is it retail, or is it a private investor, or is it an institutional investor? But I think what Thomas just said, the 80-20 or 75-25 rule is pretty accurate. And to answer this question, yes, of course, we do have institutional investors invested as well.
Thank you very much. We're heading to the end. If all people will invest only in ETFs, what will be the result? What might be a benefit and disadvantage of this situation? This is quite a common question.
To be honest, the answer is, at least from my perspective, is a pretty simple one. It's not going to happen. Because the market is so huge, it's so diverse, you have so many different investors, and still ETF is just a tool to invest into the equity markets. So you have to have equity markets to be able to invest into those. So, there's not going to be an equity market or maybe there's not going to be ETF without an equity market, okay? So ETF is just a tool to invest into the market. So it's not. I think it's not really going to happen to have 100% in ETFs.
I think to rephrase this question, I think what the implicit question is, like, what happens if the whole world invests passive and no more active investing? So that's not just ETFs; it's also indices, it's futures, it's segregated accounts, mandates. Of course, that would be a challenge to the functionality of the markets, but at the same time would open up a lot of opportunities for classic active investors that could then again generate more outperformance and would see the inflows.
Yeah, and what Michael said is basically the explanation why it will never happen. Because at some point there will be such a great opportunity for active to beat the benchmark that there is a point where you won't go further, I think.
Yeah. Plus, potentially worth highlighting that again, it's not a clear difference between active and passive. So think about all those smart beta strategies that look at things like the value factor. I mean, that's more or less what an active manager would do as well. So really differentiating between passive and active, I mean, the border is kind of blurred.
And the same thing is also on ESG right now, because ESG is not a passive strategy. It's kind of a very active strategy with filters and defining the companies you want to select out of a given universe. So the both worlds are mixing, and I think we are going to see that also in the future even more.
There's a question, quite long, but if I was to put it short, what are the obstacles, what are the difficulties for ETF provider, especially foreign ETF provider, to enter the Polish market? Someone described to have a conversation with American provider of ETFs lately, and that is already active in Western Europe. In the EU, offers ETFs with domicile in Ireland and considers entering the Polish market with their offer. Can any of the participants say a little bit about their experience with the Polish market? Any hurdles, main obstacles?
I think this American provider left a few minutes ago, that wants to enter the Polish market and cannot because of the regulation. So I think he would be the best person to answer. So I already said about it something. So I will leave the maybe Thomas.
Well, I mean, to enter the Polish market, what you need is a registration of your ETFs, and you need to provide all the information in Polish language. And I think the tricky part is the registration, because at the moment the regulator asks for a register of all investors in your ETF. And what I said before, for us it's even tricky to give you an exact breakdown what is institutional investors and what's retail investors or private investors. So it's close to impossible for a product that's listed, let's say, on LSE or Xetra, to really tell exactly which Polish investors are invested in that product. And I think that's one of the major challenges at the moment, to get ETFs registered in Poland.
Yeah, I can only echo. I mean, Poland is really hard place to, in terms of the regulator. You have some special topics in Poland. Doesn't really make it doable right now for us. And it's, I mean, iShares is trying to do this already for a number of years, and there is no real regulatory basis. And I'm a big critic of the European regulation in terms of the EU passportation, because it's a European regulation where every state has its own possibility to adjust this. What's, just doesn't really make sense at all. Yeah, it's not easy.
Okay.
I can say that I don't want to defend too much the Polish regulator, but it's not entirely their fault. It's the legal status of the ETFs, how they are seen in Poland, because European ETFs are UCITS funds, so they are open-ended funds. And in the Polish regulation, it is required that for open-ended fund you have to know, because in Poland open-ended funds are OTC, they are not securities that can be traded on the exchange. So they are registered in special registry of these funds, and you basically perfectly know who is holding what for open-ended funds. For closed-end funds, they can be listed, and when they are listed, when they are securities that can be listed, you don't have to do it, because it's done by the national depository plus the brokers that break down the holdings. So it's the depository breaks it by broker, and brokers break it by client. So it is trackable in both cases. But in case of open-ended funds that are traded on the exchanges somewhere else, not in Poland, this is tricky part, because you basically cannot, Polish regulator cannot say that, and they have some problems with that, I guess. And I'm not sure 100% if I'm giving the precisely what they are looking at, but it seems to me that the legal status of the open-ended funds in Polish law makes it difficult for them to agree on that, and there must be some change in law, I think, before the regulator can say, okay, you are welcome.
There is one more. There's last question, which I can remember, which was asked by our followers, and I promised that I will ask you about the PEPP, which is the Pan-European Pension Products or pension plans. Have you heard of it? And as far as I know, it's going to be introduced in Europe in second part of 2021. And the question is it going to change anything in terms of access to ETFs, for example, for investors in Poland? Is the competition going to increase, or is going to have no influence? Do you have any ideas about that project?
Maybe I can start on this one, because I think it's a really hard project. I've heard already the setup and the structure of this PEP in the past, or it's already some years ago, and it's an unbelievable complexity this product would have. So it's so crazy, to be honest. I mean, I have seen a lot of products, but this PEP one is going to be really hard. And take into consideration, I mean, just European countries, 27 countries, with a completely different tax status or tax basis, with different pension systems, with different fund regulation, with different registration requirements. To be able to have one product that apply to all of these standards is mind-blowing, to be honest. And I have heard it, they are trying, but I think it's going to be a nightmare for everybody who's going to be able to offer this. And this kind of complexity, also the provider, you have to consider, for every country, there has to be different accounts to be taken into account, different tax bases, different tax accumulation, different distribution accumulations, distribution taxations. To be honest, there is going to be maybe 2 or 3 companies on the European basis that will be able to offer this, but it's going to be such a small amount, and it really makes sense only for people that are switching countries. If I am a top manager, working every second year in a different European country, then it really makes sense. But for the overall normal citizens of European Union, I don't think it's the right solution. But it's only my very personal and humble opinion, to be honest.
It seems it will be good for lawyers.
Oh, it will
generally.
And advisors, it's great business plan.
And I think it's quite early stage to fully answer this question, because it's still kind of in the process of making. So probably a bit too early, and we can come back to that question next year when we have a bit more information.
Gentlemen, thank you very much for your time. You really gave us a lot of your time, 1.5 hours. It was really a long broadcast. Thank you, everyone who watched us. Please access our broadcast in YouTube, Facebook, or wherever you are. Please get into our group in Facebook, Pasywna Rewolucja, it's in Polish. But we can also speak English if you want. And I would like to invite you to our next videos, starting with next Friday. Thank you very much, everybody. See you next time.
Thank you.
Thank you very much.
Bye.
Thank you.